Hey everybody, welcome back to the show. First, I'd like to apologize. I made a video last night. I took it down. I didn't like it, and plus I made a friend upset. So I'm reformatting my rant into a coherent video. So, investing or gambling. So, I'm under no delusions when I invest. I've got no emotions in anything other than can I make money. And I think some of my friends fail to do that. And I think a lot of other people fail to realize the risk when they invest in anything, and they get emotionally attached to the segment they're investing in, and they often throw shade at other investment vehicles. So I just want to shine some light on a couple things, right? First, real estate. So real estate is, whether you like it or not, is a form of it is somewhat a form of gambling, right? And the same holds true for stocks and crypto. You're buying and not all of it, not all of it. So let's just say something that's not gambling, right? So you're a young person and you buy a twoplex or a fourplex as your first home. You use a NHA loan. You live in one side of it. You rent the other apartments out, and you're helping with your overall mortgage. And then that becomes an investment vehicle, right? When it becomes, in my humble opinion, I could be wrong. I'm not a financial advisor, so when you borrow that point is when you start leveraging properties to acquire other properties. Now, it's different if you have the cash flow where you can say, okay, here's $30,000 down on this, here's $60,000 down on this, and you're not leveraging the perceived value of the assets you possess. So once you start going to a bank and leveraging off of perceived value of an asset, that's when you, in my humble opinion, you enter the realm of gambling. And all it takes is for the bank to call a loan, or for you to have a certain percentage of your portfolio that's out of rent, meaning not earning you income, and the whole house of cards can come down. Sorry for that. It can all come down. And that's a form of leverage trading, leverage gambling. You can do the same thing in stocks. You can do the same thing in crypto. So let's move on to stocks. So stock investors love to stub their nose at real estate and crypto. So they'll often buy early in startups, whatever, right? Where they're a accredited investor, they get first dibs on early investments. Unfair, yes, but they'll speculate that this company has a good future or has a good product, right? When you speculate, that is a form of gambling. When you listen to CNBC and Jim Cramer thinks Costco not raising the price of a hot dog, go buy Costco stock. He's speculating. When you're speculating on somebody if they're going to beat earnings, guess what? You're gambling. When you pick a crypto asset and you're just picking, okay, let's pick up a Boink token or AI token or whatever that is, right? You're speculating that someone is willing to pay more for that somewhere down the road. So there's no difference, right? So some people will say, well, crypto can rug pull. Well, so can a bank rug pull you on your investment property. At any time they can call that loan. It's not likely, but they can. Or your tenant can burn down that house. or trash it, and it's a liability until you rehab it, right? You can take that person to court, whatever, but more than likely you're squeezing blood out of a turnip. Stocks, yes, they can file bankruptcy. A company can, believe it or not. There's only a certain number of people in the world. There's only so much product that company can sell, and so there is a top. So that's what I wanted to get across. I'm sorry if I come across scatterbrained yesterday or whatever. I apologize to my friend, yes, you, for being a little hot-headed or animated, but you guys can see there is a clear correlation between the three, and I'm not saying there's nothing wrong with it, and it is different than going to DraftKings or whatever and gambling on a basketball game. Not that far off, but it's the same concept, folks. You can look at it any other way you want. When you buy a property and you think it's a fixer-upper and you invest in fixing that up, guess what? You're speculating that neighborhood will justify the comps to justify your gamble, right? When you look at a stock and you think, okay, it's trading at 10 times earnings, decent revenue, I think there's a growth ahead for it, whatever. The key word is when you think, right? You don't know, you think, right? So when you pull on a pullback and you're hoping for a bounce so you can unload that position, yes, you can look at the charts, you can do all that stuff, but indicators are only right 70% of the time. You're gambling to a certain extent. Same thing with crypto. You're betting on something catching on or providing a service 2 years from now. All right, gang. That's all I got for that one. It's real quick. Just wanted to make the clarifications. Sorry if I made anyone upset. My buddy, forgive me. We'll go grab lunch tomorrow. Beefy out. See ya.